Hey there, first home buyers, are you ready to take the first step towards buying your dream home in Australia? Well, hold up. Before you start scouring the internet for perfect property, you need to get a pre-approval from a lender first. It's like the golden ticket to knowing how much you can borrow. But with so many lenders out there, how do you choose the right one? Well, don't worry, we've got you covered with some practical tips. Just make sure to hit the subscribe button and ring the bell notification button so you don't miss out on any helpful content coming your way. So preparing to buy your first home in Australia, the first step is to obtain a pre-approval from a lender. A pre-approval is a letter from a lender that indicates how much you can borrow and is generally valid for 3 months, which is 90 days. Here are some practical tips on how to obtain a pre-approval, as well as the pros and cons of choosing a certain lender. Now, number 1, shop around. It's a good idea to shop around and compare pre-approval offers from different lenders. This will help you find the best interest rate and loan terms for your needs. You can research different lenders online or consult with a mortgage broker like myself or anyone else that's a mortgage broker to help you compare different pre-approval offers. Number 2, gather documentation. You need to provide certain documents to the lender to obtain a pre-approval. This typically includes proof of income, savings and expenses, as well as identification, for example, your driver's license, Medicare, and passport. Make sure you have all your documentation ready before you apply. Number 3, understand the terms and conditions. It's important to read and understand the terms and conditions of the pre-approval before you accept it, okay? Pay attention to things like the interest rate, fees, and any conditions that may apply, such as a minimum deposit amount or a requirement to purchase with mortgage insurance. And number 4, consider pros and cons of different lenders. Different lenders have different pros and cons. For example, I have about 25 lenders and not all of them are the same. So it's important to weigh your options carefully. Here are some things to consider. Major banks. Major banks typically offer a wide range of home loan products and may have branch locations convenient for you to visit. However, they may not always offer the most competitive interest rate. For example, NAB, Westpac, CBA, ANZ, they do a lot of advertising and their rates may not be as sharp as second tier lenders like ING, Suncorp, or St. George, to give you an example. And the application process may be more stringent because, they're big banks, high net worth banks, so therefore their criteria might be high because they only want to look for high net worth clients.
It's all right,
Now, non-bank lenders. Non-bank lenders are financial institutions that do not hold a banking license, but they may offer more flexible loan terms and lower interest rates than major banks, but they also may have higher fees and sometimes higher interest rates depending on your credit score and less extensive customer support. Now, another option is online lenders. Online lenders offer the convenience of applying for a pre-approval online and may have lower fees than traditional lenders. However, they may not have a physical presence and sometimes you don't know where the lender is coming from. Kind of dodgy sometimes. Moving on to number 5, watch out for hidden fees and charges. Some lenders may have hidden fees and charges such as application fees or exit fees. Make sure you read the fine print and understand that all fees and charges associated with your pre-approval before you sign on a dotted line. And last tip, number 6, avoid multiple pre-approvals. Applying for multiple pre-approvals with different lenders can negatively impact your credit score. It's best to do your research, choose the lender you want to go with, and just keep with it. For me, as a mortgage broker, we don't try to apply to multiple lenders and hope for the best because it ruins your credit score. Every time you apply, you lose 5 to 10 points of your credit score. We all start off with 900 to 1,000 points. If you keep applying just for the sake of applying, then your credit score might be sabotaged. So in summary, guys, obtaining a pre-approval is an essential step in preparing to buy your first home in Australia. By shopping around, gathering your documentation, understanding the terms and conditions, and considering the pros and cons of different lenders, you can increase your chances of getting a pre-approval with your favorable loan terms. Just remember, guys, watch out for hidden fees and charges and avoid applying for multiple pre-approvals to protect your credit score. Protect it. And make sure you hit the subscribe button, hit the bell notification button for future videos and tips like this. And until next time, keep calm and mortgage on.